welcome to IGTV, and this is your special look ahead to the 28th of February. Now, we start in the antipodes, especially with New Zealand, an interest rate decision expected there. The official cash rate forecast to remain at 5.5%. Just showing you this chart here of the Aussie dollar and the New Zealand dollar. Really, the two are on the defensive as risk aversion really dominates ahead of a raft of global inflation data, most notably out of the US. What's interesting as well is that all this, of course, will also relate to the crosses of these two, very much mining-dominated currencies, because, especially the Aussie dollar, because they are both also extremely volatile against the US dollar. In fact, the big number that might move these crosses will come on Thursday, and that is the PCE out of the US. Further along, as I mentioned earlier, it's really a theme. There's an antipodean theme here. Australia out with inflation indicators. Well, this is the monthly CPI indicator. Expectations for January, 3.5%. Is coming down slowly but surely, but still very sticky there. Further along the session, it's all to do with US data, as I mentioned earlier this week, dominated by data out of the US. We've got the Q4 GDP growth rate. This is not the first estimate, it's the second estimate. But all eyes to see whether the US economy continues to be robust, thus achieving perhaps that soft landing that everyone is keen on, including the Fed, or is it going to start to falter and perhaps give the Fed some ammunition in terms of the timing of its first rate cut in this cycle. Also watch out for wholesale inventories and EIA crude oil inventories too. Now, we're not completely done with earnings yet. We've got Reckitt Benckiser out with full year numbers, along with Taylor Wimpey and Aston Martin Lagonda. Just looking at Reckitt Benckiser here, the company behind names like Sillet Bang. And companies like Reckitt have managed to push through price hikes quite successfully, very much like other companies like Danone and Nestle as well. But recently, some companies in this space have found that it's been difficult to continue pushing through these price hikes. Everything, if you remember, everything from sunflower oil to freight in the last couple of months or even a year have become more expensive as spats between retailers and consumer goods companies have increased. We've also had the supply chain issues and also high inflation. But if you can take a look here at this red line that I've drawn for you, since around the end of last year, we've seen Reckitt Benckiser in terms of technicals. It's actually achieved a base here at around 53.20, around there. And it has been progressively climbing. Let me just show you that trend channel here. And we've seen the bottom of two wicks, showing, touch close to the first one touching there. Still tentative signs, but it is slowly marching higher. What we're looking out for is a third touch for confirmation. At the moment, it's not looking anywhere near overbought in terms of the RSI. So perhaps this stock, from a technical vantage point anyway, still has some way to rise. Elsewhere on the corporate calendar, we've got Just Eat Takeaway and also Wholesome. Just giving you a quick look at Just Eat Takeaway, because as you can see here, if I widen this out, this is a sector that is in trouble. Many of the darlings in terms of home delivery that did really well during the COVID and lockdown periods are now really struggling. We heard from Just Eat's rival quite recently, Grab, which is trying to unwind its food panda in Southeast Asia, also say that it is trying to consolidate in trickier times. And last but not least, in the US, we have fourth quarter numbers from Salesforce and Snowflake as well. And that's your latest preview to the 28th of February. Until then, do tune in at 7:30 for a heads up to the European market trading day with Jeremy Naylor And I'll join you at 13:30 for Beat the Street, which gives you a heads up to the Wall Street Open. I'm Angeline Ong, and this is IGTV.